Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look at the euro currency again. So this week it's really the big bulk of the information that we need to keep an eye on. And we're trying to do this in a weekly report as usual. So also discuss briefly the geopolitical situation that stands currently in Europe, because currently it actually becomes also the important driving factor for the euro currency, because this tension stands near the European Union, although it is in Eastern Europe, but still it's rather close. So, and of course the economical factors, which is the Fed policy that stands in focus. So we have tried to provide wide opinions on this subject. So even some analysts and economists think that Fed could even not change the rate in March, just because they appeal to the fact that month-over-month change in inflation, for example, is starting to decrease. So the pace of the growth is decreasing, the slowdown of the month-to-month change in inflation. And they said that, well, in this current situation, and this dropping in the consumer sentiment, spendings, that might work as a holding factor for the Fed. Well, although maybe it has some sense to think in this way about the Fed policy, but in general we should understand that Fed policy is mostly the trend. They are preparing markets for this trend, and when this trend is taking the pace, it can't be stopped just at one time, because this trend has momentum, and Fed do not like to surprise the markets. Besides, when Fed, once they do something, they really see the tendency, and this tendency usually more or less solid in terms of times and pace. From that standpoint, personally, I think that I would choose between just a single step of the rate change or two steps, just immediately to half of the percent change of the rate, instead of the gambling on no rate change and one step change. So that's just our opinion. The second moment we'll try to discover in our report is dedicated to geopolitical. We should not be deceived with the temporal ease in the geopolitical tensions that we have currently, because this is a really long-term game, and the more tensions will come. So be prepared for support of the dollar value. Also, the results of the geopolitical tensions will have impact on the domestic political environment in the United States, because as you know that the Joe Biden position in general stands fragile. It has not really big rating, and any weakness in the geopolitical arena, for example, it could play the negative impact on the geopolitics, accelerate domestic political struggle in the country, would lead to some unrest, maybe even in some regions, as it was already previously, and that could make impact on the economy as well. So we see some indirect relation between long-term geopolitical situation, how this confrontation between the NATO and United States and Russia will develop. It could make impact on the political and economical data inside the US as well. But this will happen hardly in the first half of the year, maybe it will be a bit later. So at the same time, as I said, we suggest that the geopolitical tensions will have the long time, and it will have the consistent long-term effect on the forex market, especially on the euro currency. So for these two moments do not let us to suggest that euro currency surprisingly could turn up again. We suggest that it should keep going lower in the longer term, at least within a few months. So speaking on the technical side, we keep our target is 109.110 on the monthly chart, which is the yearly pivot support one. Also, if you take a look at the weekly chart, you will see that market oversold level on the weekly charts also stands in the same, is in this area as 109.50 approximately. So, and in fact, as euro already has broken through the major 618 support on the monthly chart, the oversold and the yearly pivot point is the only support areas that could hold euro from a further drop. So we keep this target as our primary target right now. On the daily chart, with this recent sell-off, market still stands and then oversold on the daily chart, which suggests that maybe some pullback here could happen. And from that standpoint, the one pattern that we could keep an eye on, for example, it might be the bread and butter sell, which could provide not bad opportunity to consider taking the short position. Supposedly it might be around 1260, which is the 30% of the thrust. Here thrusting action is very strong. It has enough candles to treat it as thrust by the Jordan framework, and as you can see, it's actually we have the strong acceleration down for this recent few bars. So the pullback in the way of the bread and butter might be really a good step to consider currently on the daily chart. On the intraday charts, we have the 4-hour time frame chart XOP, which also agrees with our target, stands 109.68, which is in general stands around the monthly target. On the hourly chart, guys, I do not see yet something really valuable. Yes, we have some upward direction on Friday. We have talked about the double ripple buy, if you remember, on the hourly chart here. But, well, maybe here will be some kind of the even hand and shoulders could be formed. We will see. Personally, I'm really do not have big wish to participate in any bullish pattern on the hourly chart. I would prefer to see the pullback and then consider the short position taken rather than trying to catch the reversal pattern here, trying to buy euro with a possible upward action. So you could try to do this, but well, currently we have just this bounce, and this is not really enough to consider any long entry currently on the euro currency. So in general, to give us the bread and butter, market has to climb back to the 1236. This is the 618 level on the hourly chart. This was actually creates the confidence area with the daily 30% level. So that's the level that probably we need to keep an eye on, because we consider the daily chart as a primary one for trading. Although on the hourly chart, maybe you will find something interesting for trading on the next week. So that's actually what we have on the technical side.